Question 1. What is the primary difference between short-term and long-term disability insurance? A. Short-term disability insurance has a longer elimination period compared to long-term disability insurance. B. Long-term disability insurance is usually more affordable than short-term disability insurance. C. Short-term disability insurance provides benefits for a longer duration than long-term disability insurance. D. Long-term disability insurance provides benefits for a longer duration than short-term disability insurance. Answer: D. Long-term disability insurance provides benefits for a longer duration than short-term disability insurance. Explanation: short-term disability insurance typically covers a temporary period of disability, often lasting between 3 to 6 months. In contrast, long-term disability insurance can provide benefits for several years or until the insured reaches retirement age. The difference in duration is the key factor that distinguishes the two types of insurance. The elimination period, waiting period before benefits begin, is usually shorter for short-term policies than for long-term policies. While both types serve to replace lost income, long-term disability insurance is intended to cover more extended periods of disability. Question 2. Mr. Adams is a self-employed individual who experiences a disability and wants to apply for disability insurance benefits. Which of the following is most likely to apply to him? A. Mr. Adams can apply for standard group disability insurance as long as he has at least 5 employees. B. Mr. Adams is eligible for standard disability insurance if he has worked for at least 3 consecutive years. C. Mr. Adams can apply for self-employed disability insurance, which has different terms than group coverage. D. Mr. Adams is not eligible for any form of disability insurance because he is self-employed. Answer: C. Mr. Adams can apply for self-employed disability insurance, which has different terms than group coverage. Explanation: self-employed individuals are typically not eligible for group disability insurance, which is often employer-sponsored. However, self-employed disability insurance policies are available, that they differ from group policies in terms of eligibility requirements, coverage, and premiums. These policies are designed to cater to the unique needs of self-employed individuals, offering them the ability to secure income replacement in the event of a disability. The other options are incorrect because they either confuse eligibility criteria or wrongly assume that self-employed individuals can access group insurance. Question 3. Which of the following statements about disability insurance fraud prevention is true? A. Disability insurance fraud is only an issue in private insurance, not public programs like Social Security Disability Insurance (SSDI). B. The role of law enforcement in disability insurance fraud is limited to investigating fraudulent claims made by policyholders. C. Fraud prevention techniques for disability insurance often include examining medical records for inconsistencies. D. Once a claim is paid, it cannot be revisited for possible fraud, even if new information arises. Answer: C. Fraud prevention techniques for disability insurance often include examining medical records for inconsistencies. Explanation: fraud prevention is a critical component of disability insurance claims management. One of the primary methods of detecting fraud is by carefully reviewing medical records for discrepancies or inconsistencies. This ensures that the claims made are legitimate and that the individual is actually disabled as claimed. Option is incorrect because fraud can affect both private and public disability programs. Option B is incorrect because law enforcement is involved in investigating fraudulent claims from both policyholders and providers. Option D is incorrect because insurance companies can revisit claims if new information or evidence comes to light. Question 4. Which of the following is a primary responsibility of the insurance adjuster when processing a disability insurance claim? A. Determining the policyholder's eligibility for Social Security Disability Insurance (SDI). B. Conducting medical examination to diagnose the claimant's condition. C. Reviewing medical records and employment history to evaluate the validity of the claim. D. Proving or denying the claim without further investigation. Answer: C. Reviewing medical records and employment history to evaluate the validity of the claim. Explanation: the insurance adjuster's primary role in the claims process is to review the medical records and employment history of the claimant to assess whether the claim is legitimate and whether the policy's terms and conditions are met. They may also assess other relevant documentation such as the severity of the disability and the duration of the inability to work. The adjuster does not typically diagnose the claimant's condition (option B) or determine eligibility for SCI (option A), though those may influence the decision. denying or approving claims without adequate investigation. Option D would be breach of due diligence in the claims process. Question 5. Which of the following best describes the elimination period in a disability insurance policy? A. The period of time that a policyholder must wait after becoming disabled before receiving any benefits. B. The maximum amount of time that benefits can be received during a claim. C. The length of time a policyholder has to file a claim after becoming disabled. D. The period when a policyholder is required to work before becoming eligible for benefits. Answer A. The period of time that a policyholder must wait after becoming disabled before receiving any benefits. Explanation. The elimination period, often referred to as the waiting period, is the time between the onset of a disability and the date benefits begin to be paid. This period is typically measured in weeks and can vary depending on the policy. It serves to reduce the number of small, short-term claims that may not justify the cost of processing. The other options are incorrect because they misinterpret the concept of an elimination period, focusing on the claim filing process. Option C, the duration of benefits. Option B, or work requirements. Option D. Question 6. In Wyoming, which of the following is true regarding the mandatory coverage requirements for employers offering disability insurance? A. Employers must offer long-term disability insurance to all employees, regardless of the size of the company. B. Employers are only required to provide disability insurance to full-time employees and are not obligated to cover part-time workers. C. Employers must provide disability insurance coverage for all employees, both full-time and part-time, if the company has more than 10 employees. D. Wyoming law does not require employers to offer disability insurance to their employees under any circumstances. Answer. B. Employers are only required to provide disability insurance to full-time employees and are not obligated to cover part-time workers. Explanation. Under Wyoming law, there is no general requirement for employers to offer disability insurance to employees. However, when disability insurance is offered, it typically applies to full-time employees. There are no requirements for employers to offer coverage to part-time workers unless the employer voluntarily chooses to provide it. The other options are incorrect because they either misstate the specific requirements or introduce unnecessary regulations regarding company size and full-time versus part-time status. Question 7. Which of the following exclusions is most commonly found in individual disability insurance policies? A. Disabilities caused by pre-existing conditions not disclosed during the application process. B. Disabilities caused by accidents that occur outside the United States. C. Disabilities that occur after the policyholder turns 65 years old. D. Disabilities resulting from work-related injuries covered by workers' compensation insurance. Answer A. Disabilities caused by pre-existing conditions not disclosed during the application process. Explanation. Most individual disability insurance policies contain an exclusion for disabilities caused by pre-existing conditions. If the policyholder had a medical condition before applying for coverage and failed to disclose it, that condition may not be covered if it leads to disability. This is a common exclusion clause in disability policies to limit risk for insurers. The other options are generally not exclusions in most policies. Disability resulting from work-related injuries is typically covered by workers' compensation, option D, and there are no general exclusions related to the location of the accident, option B, or age of the insured, option C. Question 8. Which of the following is most likely to influence the premium rate of a disability insurance policy? A. The insured's occupation and health status. B. The insured's age and marital status. C. The insured's geographical location and income level. D. The number of dependents the insured has. Answer A. The insured's occupation and health status. Explanation. The premiums for disability insurance are influenced by the policyholder's occupation and health status, as these factors directly affect the likelihood of filing disability claim. High-risk occupations, such as those in construction or heavy machinery, typically result in higher premiums due to the increased risk of disability. Similarly, pre-existing health conditions or poor health status will likely raise premium rates because they increase the risk of the insurer having to pay benefits. The other factors, such as marital status, option B, income, option C, or dependents, option D, are less impactful on premium rates. Question 9. A worker is covered by both workers' compensation insurance and private disability insurance. Which of the following is correct regarding the coordination of these benefits? A. The workers' compensation insurance will always cover the full amount of the worker's lost wages and disability insurance is not needed. B. Disability insurance benefits will be reduced if the worker is also receiving workers' compensation benefits. C. Workers' compensation benefits are paid for longer period than private disability insurance benefits, so there is no need to coordinate. D. Disability insurance benefits will be paid in addition to workers' compensation benefits with no reduction. Answer: B. Disability insurance benefits will be reduced if the worker is also receiving workers' compensation benefits. Explanation: when an individual is receiving both workers' compensation and private disability benefits, the private disability benefits are typically reduced to account for the workers' compensation payments. This is done to prevent double dipping, where the individual would receive more than 100% of their lost income. The other options are incorrect because they misunderstand how these benefits interact. Workers' compensation benefits do not always cover the full amount of lost wages. Option A, and both types of insurance typically coordinate benefits. Option D, the duration of benefits can vary, but both are meant to be complementary, not duplicate coverage. Option C. Question 10. Mr. Martinez, a worker in the construction industry, is applying for disability insurance coverage. Which of the following is most likely to be considered a high-risk factor when underwriting his application? A is age, as older individuals tend to be more likely to become disabled. B is occupation in construction, which involves physical labor and carries a higher risk of injury. C, his income level, as higher income workers tend to have more accidents. D is geographical location, as workers in certain regions are more prone to disability. Answer: B is occupation in construction, which involves physical labor and carries a higher risk of injury. Explanation: in disability insurance underwriting, the applicant's occupation is a key factor in determining risk. High-risk occupations, such as those involving physical labor, construction, or other hazardous work environments, are more likely to result in injury or disability, which increases the likelihood of a claim. As a result, Mr. Martinez's occupation in construction would likely result in higher premiums or more stringent terms in his policy. While age, option A, can affect premiums, occupation is typically a more significant factor. Income level, option C, and geographical location, option D, are less commonly used in underwriting decisions compared to occupation. Question 11. Which of the following is true regarding the lone occupation definition of disability in a disability insurance policy? A. The policyholder must be unable to perform any occupation for which they are reasonably qualified. B. The policyholder must be unable to perform the duties of their own specific occupation. C. The policyholder is not eligible for benefits if they can still perform any occupation. D. The policyholder must be unable to perform their occupation due to a disability that affects their cognitive abilities. Answer: B. The policyholder must be unable to perform the duties of their own specific occupation. Explanation: the known occupation definition of disability means that the policyholder is considered disabled if they are unable to perform the essential duties of their specific job or occupation, even if they can perform other types of work. This is generally more favorable to the insured compared to other definitions, such as any occupation which would require the insured to be unable to perform any work they are qualified for. Question 12. Which of the following would most likely be excluded from coverage under a standard disability insurance policy? A. A disability resulting from a car accident. B. A disability resulting from a self-inflicted injury. C. A disability caused by an illness contracted after the policy was issued. D. A disability caused by a sports-related injury during recreational activities. Answer: B. A disability resulting from a self-inflicted injury. Explanation: most disability insurance policies exclude coverage for injuries or disabilities caused by self-inflicted harm. This includes any injury or condition the policyholder deliberately caused themselves, such as through attempted suicide or intentional harm. The other options, including accidents and illnesses, are typically covered unless specifically excluded by the policy. Question 13. What is the purpose of the residual disability benefit in a disability insurance policy? A. To provide full disability benefits if the policyholder can no longer work at all. B. To offer partial benefits if the policyholder can still perform some duties but not all. C. To pay for the cost of rehabilitation services for the insured. D. To cover the loss of income when the policyholder has only temporary disability. Answer: B. To offer partial benefits if the policyholder can still perform some duties but not all. Explanation: the residual disability benefit provides partial disability benefits when the policyholder can no longer perform some but not all of their job duties. This helps replace a portion of their lost income if they can still work but are unable to work at full capacity. This is different from total disability, which offers full benefits when the insured cannot perform any work. Question 14. In the event of a disability, what is the typical duration for a short-term disability insurance policy to pay benefits? A. Up to 5 years. B. Up to 1 year. C. Up to 90 days. D. Up to 2 years. Answer B. Up to 1 year. Explanation. Short-term disability insurance policies typically provide coverage for a shorter duration, usually up to 1 year. These policies are designed to replace income during the period when an individual is temporarily disabled and unable to work. Long-term disability insurance would cover more extended periods, sometimes for the rest of the policyholder's life or until they reach retirement age. Question 15. A person in Illinois has a disability insurance policy that covers a 180-day elimination period if the policyholder becomes disabled and is unable to work. When would the benefits likely start? A. Immediately, as long as the person is disabled. B. After 30 days of disability. C. After 180 days of disability. D. After 180 days of waking after the onset of the disability. Answer D. After 180 days of waiting after the onset of the disability. Explanation. The elimination period is the waiting period before benefits are paid after the onset of a disability. In this case, the person must wait 180 days or 6 months after the disability begins before benefits will start. The elimination period is similar to a deductible, but in terms of time rather than money. Question 16. Which of the following is a common feature of group disability insurance policies? A. Higher premiums than individual policies due to the collective nature of the plan. B. Coverage that typically starts immediately after a disability occurs with no waiting period. C. Guaranteed acceptance with no medical underwriting for employees of the sponsoring employer. D. The ability to customize coverage levels based on personal needs. Answer C. Guaranteed acceptance with no medical underwriting for employees of the sponsoring employer. Explanation. One common feature of group disability insurance policies is that they generally do not require medical underwriting, meaning that employees of the sponsoring employer are typically guaranteed coverage without having to undergo a medical exam or disclose health conditions. Group policies also tend to have low premiums compared to individual policies, as the risk is spread across a large group of people. Question 17. Which of the following is most likely to increase the premium for a disability insurance policy? A. A higher deductible. B. A shorter elimination period. C. A longer benefit payment period. D. A low benefit amount. Answer B. A shorter elimination period. Explanation. A shorter elimination period means the insured will start receiving benefits more quickly, which increases the insurer's risk and thus the cost of premiums. The other options, high deductible, longer benefit period, or lower benefit amount, generally would not increase premiums as much as shorter elimination period would. Question 18. Which of the following statements is true about workers' compensation insurance in relation to disability claims? A. Workers' compensation benefits are always considered taxable income for the employee. B. Workers' compensation benefits are typically paid out by the employer's disability insurance policy. C. Workers' compensation insurance covers job-related disabilities, but not injuries that occur off the job. D. Workers' compensation is voluntary, and employees must choose to participate in the plan. Answer C. Workers' compensation insurance covers job-related disabilities, but not injuries that occur off the job. Explanation. Workers' compensation insurance is designed to cover injuries or disabilities that occur as a result of work-related activities. It does not cover injuries that happen outside of work or personal health conditions unrelated to the workplace. In most states, workers' compensation is mandatory for employers and covers both medical expenses and lost wages. The benefits are typically not taxable, option A, and the employer is responsible for providing coverage, not the employee, option D. Question 19. Which of the following is true regarding long-term disability insurance policies? A. Lead insurance typically provides benefits for up to 10 years or until the insured reaches retirement age. B. Lead insurance benefits are usually paid out in a lump sum. C. Lead policies typically offer higher monthly benefits than short-term disability policies. D. Lead insurance only covers disabilities resulting from accidents and not from illnesses. Answer A. Lead insurance typically provides benefits for up to 10 years or until the insured reaches retirement age. Explanation. Long-term disability insurance provides benefits for an extended period, often up to 10 years or until the insured reaches retirement age, depending on the policy. Unlike short-term disability insurance, which typically covers temporary disabilities, LTD is designed to provide ongoing income replacement for more serious or long-lasting disabilities. The benefits are usually paid on a monthly basis, not as a lump sum, and LTD insurance typically covers both accident and illness-related disabilities. Option D. Question 20. Which of the following best describes the term underwriting in the context of disability insurance? A. The process of determining the amount of coverage an individual qualifies for based on their income. B. The process of determining the applicant's eligibility and the risk involved in insuring them. C. The process of calculating the disability benefits paid out over time. D. The process of assessing the claimant's medical condition after disability has occurred. Answer. B. The process of determining the applicant's eligibility and the risk involved in insuring them. Explanation. Underwriting is the process used by insurance companies to assess the risk of insuring potential policyholder. This includes reviewing the applicant's health, occupation, lifestyle, and other factors to determine the terms of the insurance policy, including the premium and coverage amount. It is not related to calculating benefits, option C, or determining post-claim eligibility, option D. Question 21. Which of the following would be an example of a pre-existing condition exclusion in a disability insurance policy? A. A person becomes disabled due to a heart attack that occurred after the policy was issued. B. A person with a history of back pain becomes disabled due to a new back injury. C. A person suffers a disability after a car accident while not having any prior injuries. D. A person becomes disabled due to a stroke that they experienced after the policy's effective date. Answer. B. A person with a history of back pain becomes disabled due to a new back injury. Explanation. A pre-existing condition exclusion applies when a policyholder becomes disabled due to a medical condition that existed before the policy was issued. If a person has a history of back problems and the disability occurs as a result of a back injury, this may fall under a pre-existing condition exclusion depending on the specifics of the policy. The other scenarios do not involve conditions that existed before the policy's effective date. Question 22. What does a non-cancelable disability insurance policy mean? A. The insurer can cancel the policy at any time, but the premiums remain the same. B. The policyholder can cancel the policy at any time. C. The insurer cannot cancel the policy or increase premiums as long as the premiums are paid. D. The policy is non-renewable after a set number of years. Answer. C. The insurer cannot cancel the policy or increase premiums as long as the premiums are paid. Explanation. A non-cancelable policy means that the insurer cannot cancel the policy or change the terms, such as increasing premiums, as long as the policyholder continues to pay the premiums. This provides the policyholder with stability as the policy terms are guaranteed. Question 23. What does lone occupation disability coverage provide? A. Coverage if you are unable to perform any job. B. Coverage if you are unable to perform the specific tasks of your job. C. Coverage only for work-related injuries. D. Coverage for a limited time based on your ability to return to work. Answer. B. Coverage if you are unable to perform the specific tasks of your job. Explanation. Lone occupation disability coverage allows the policyholder to receive benefits if they are unable to perform the duties of their specific occupation, even if they can work in another occupation. This is generally more comprehensive compared to any occupation coverage, which would only pay benefits if the insured is unable to perform any work for which they are qualified. Question 24. What is typically included in a disability buyout rider in a disability insurance policy? A. The insurer will buy out the policyholder's business in the event of disability. B. The policyholder can buy additional coverage in the event of disability. C. The insurer will pay a lump sum if the policyholder's business is disabled. D. The policyholder can sell their business at a discounted price if they are unable to work. Answer A. The insurer will buy out the policyholder's business in the event of disability. Explanation. A disability buyout rider typically applies to business owners, allowing the insurer to fund the buyout of the disabled owner's share of the business. This is especially useful in partnership arrangements where the disability of one partner may trigger a need for that partner's shares to be bought out by the remaining partners. Question 25. What is a waiting period in the context of disability insurance? A. The time between the application and approval of the policy. B. The period the policyholder must wait before claiming benefits. C. The time it takes to process a disability claim. D. The period after a disability occurs when benefits are paid immediately. Correct answer: B. The period the policyholder must wait before claiming benefits. Explanation: the waiting period or elimination period refers to the period of time the policyholder must wait after becoming disabled before they can begin receiving benefits. The length of this period can vary and is typically anywhere from 30 to 180 days. Question 26. Which of the following could be an example of an occupation-related disability that is typically covered under disability insurance? A. A back injury caused by lifting heavy equipment while at work. B. A cold contracted from exposure to weather during the commute to work. C. An injury sustained during a sports activity after work hours. D. A disability caused by a pre-existing medical condition not related to work. Answer A. A back injury caused by lifting heavy equipment while at work. Explanation: disability insurance typically covers disabilities resulting from work-related activities, such as a back injury caused by lifting heavy equipment at work. This type of injury would be eligible for benefits under most disability insurance policies, provided it meets the terms of the policy. The other examples are unlikely to be covered as they do not directly stem from work-related activities. Question 27. In disability insurance, what does the term benefit period refer to? A. The period during which the policyholder can file a claim. B. The maximum length of time for which disability benefits will be paid. C. The waiting period before benefits begin. D. The time it takes for the insurer to process a claim. Answer B. The maximum length of time for which disability benefits will be paid. Explanation: the benefit period refers to the maximum length of time that disability benefits will be paid out to the policyholder after the elimination period is completed. The benefit period can range from a few months to several years, depending on the terms of the policy. Question 20. Which of the following is generally excluded from disability insurance coverage? A. A disability caused by a car accident while commuting to work. B. A disability resulting from an illness diagnosed after the policy was issued. C. A disability caused by participation in an illegal activity. D. A disability resulting from a job-related accident. Answer C. A disability caused by participation in an illegal activity. Explanation: most disability insurance policies exclude coverage for disabilities resulting from illegal activities, such as being injured while committing a crime. The other situations, including job-related accidents and illnesses diagnosed after the policy was issued, are typically covered unless specifically excluded in the policy. Question 29. Which of the following is a characteristic of group disability insurance? A. It is more expensive than individual coverage. B. It provides higher benefit amounts than individual policies. C. Coverage is typically guaranteed without individual underwriting. D. It only covers disabilities resulting from accidents. Answer C. Coverage is typically guaranteed without individual underwriting. Explanation: one of the key features of group disability insurance is that coverage is usually guaranteed for all eligible participants without requiring individual medical underwriting. This makes it easier for employees to obtain coverage through their employer. Group policies typically have lower premiums compared to individual policies, but the benefits might be more limited. Question 30. What does a cost of living adjustment rider in a disability insurance policy do? A. It increases the premium costs of the policy each year. B. It adjusts the disability benefit amount based on inflation. C. It provides extra benefits if the insured is disabled for more than a year. D. It allows the insured to continue working while receiving partial benefits. Answer B. It adjusts the disability benefit amount based on inflation. Explanation: a cost of living adjustment rider is designed to increase the disability benefit over time to keep up with inflation. This helps the insured maintain the purchasing power of their benefits as the cost of living rises. This rider typically applies after the policyholder has been disabled for a certain period, such as 1 year.